Hello, fellow traders. Tis I, the Rumpled One, coming to you on Wednesday, May the 18th. The year is 2022. Let's talk trading. Risk Part 11 with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal, how's your day going?
I'm doing okay. I've got lots of losses, but even more profits, so that's always a good day. And to be honest with you, I can go and basically say that the reason why I got more profit than losses is because of risk management. And it's just controlling the losses, and when the losses mount up, just get out of the trades, take the loss, be a big boy about it, and just take your lumps and know that there's another trade coming down the pike, and take that trade. And if you got a solid trading plan, it'll pan out for you. And that's just what I did today. So if you look at my, we have that indicator, I think that you modified, the trading, what is it called? Not trading plan, but trading.
The trade report?
Trade report. Thank you. I couldn't get that out. Sorry about that, guys. But I got a bunch of trades out there, and it shows that I'm only 67% efficient today. And normally I'm closer to 80 and 90. So in one sense, it says, hey, you had a terrible day. But on the other hand, I got a nice little profit because of just going and following rules, following my trading plan, and just following those things. And, I was thinking, you said to me, do you remember what we talked about yesterday? I said, nope, not at all. But it got me thinking about, some of the things we have talked about, this whole idea with, controlling your risk. Well, if you really think about it in the past, some of the things we've talked about is you got to limit how much your leverage that you use. In other words, just because you can trade 10 lots doesn't mean you should trade 10 lots. And then we talked about having an actual trading plan and following it, and that's what I did. Between those two things, I didn't go and over leverage myself. Number one, and number two, I did have a trading plan, and I stuck to my trading plan. And I had faith in my trading plan because I know statistically over time it will go and pan out. It may not pan out this minute, but over time it will. And then the third thing is, I didn't have to go to it, but the third thing is, I was prepared for the worst. In other words, pull the plug and not trade anymore for the day, so I can preserve capital. And those are the things that we really have come down to, and, I know you like to talk a lot about it, and I do as well. And that is this whole idea of risk management, because you got to go and control your emotion. And I think, this, correct me if I'm wrong, but I think we can control our emotion a lot easier if we go and do those other three things. We go and control, we go and follow a trading plan. We limit how much we're going to go and leverage, so we're never in a situation where we put ourselves emotionally drained, so to speak, and we have reasonable expectations of what we're going to go and win in terms of profit.
Yeah, well, there's two things I want to dig into that you just talked about. The first one is you said you had a 67% efficiency. I think most traders would be happy with that.
Right.
I mean, because basically you're winning 2 out of 3 trades.
Right.
And so,
Now,
yeah, so the thing is, but you're saying for you, that's an off day.
that is an off day. Now, you got to remember, I'm also not looking to go and try to pick up 50 or 100 pips, on a trade. I'm looking to pick up 1, 2, 3 pips. And the thing is, you ask most traders, can you go and win 1 pip? The majority of the time, and most traders will tell you, absolutely, I can win 1 pip. Okay? Well, that's my trading style. That's what I'm doing. I'm trying to go and win 1, 2, 3, and then get lucky and get that Walmal trade that goes out there and gives me a 10 pip run for the day or something like that. But I'm happy if I get a 1, 2, or 3. It's just do it over and over again, and just they add up, as you like to say, stack some bricks.
Yeah.
And that's what I like to do.
Yeah, but I think though the focus is, once again, if you're winning 2 out of 3 trades, you're doing well. So I just want, the traders out there not to think that, they need to be winning 4 out of 5 or 9 out of 10.
Absolutely. That goes to that point of, have realistic expectations. And the thing is, when I first started trading, I wasn't winning 2 out of 3. I mean, I was winning 51% of the time, 52% of the time, and by controlling how much I was losing, and by doing that, I was able to stay, at even or maybe sometimes a little bit above until I got it down where, hey, just because my method says to take a trade here, it just doesn't look right to me. I'm just going to hold off on it. And I know you're not supposed to do that, but I do that. I just, sometimes, excuse me, you get innate feelings sometimes where you're not sure quite what it is, but you know that this is probably not a trade to get into. Now, there are times when I do that, and I kick myself in the pants and say, oh, good grief, look at that. Look what I left on the table there. I could have taken that. But most of the time, for me anyway, I think I find myself in a situation where, okay, I'm glad I didn't take that trade.
Right. Because, yeah. And the thing about, the 1 or 2 pips, a lot of traders are going to poo-poo that. But I don't think if you say, can you make 1 pip, then they say, oh yeah, that's easy. I think if you put them to the test, they would find out that they're going to probably be underwater by 2 or more pips before they get that pip more often than they realize.
Oh, absolutely. Just think about it logically. You go and let's say you're working on ECN, and your ECN has a commission of, let's say, 1 pip. I'm just picking numbers out of the air. Okay, and then the spread typically for them is 0.2. That means the moment you go and press the trigger to go and take a trade, you're immediately underwater 1.2, and you haven't even done anything yet. All you've done is press the trigger, and I don't know. I think it's a 50-50 thing. You claim it's more, but I think it's a 50-50 thing where it goes against you by a pip or it goes with you for a pip. But the thing is, even if it goes with you a pip, you're still underwater. Okay, so that's why I'm saying you have to go and basically what you got to do, for me anyway, to go and make a pip, you got to go and make 2 pips, or more, and that's it's a lot harder than people think, but at the same time, if you have a good solid trading plan and you have a method that seems to work out statistically, well, guess what? You can do it.
Right. Right. And, one of the things about this is kind of getting off the subject of risk, but when when we look at candles, a lot of times we look at the range, say, okay, like this hour, the candle has gone 21 pips from the high of this hour to the low of this hour. But the thing is, we don't know where that high is going to be or that low is going to be till that hour is over. But we do know one measurement for sure, and that's the open of the hour. And so, if you look at, say, like buy zone statistics, I've got the smart ranges indicator, but we're looking at high at low, high minus the low. But if we look at, say, high in the open, the statistics are different. So you can see here from the open, last hour was 17 pips, and then high to open, and the hour before that was 22. So the open is really crucial in trading to get that. And then on the other hand, if we like to look at the other side, if we look at open minus low, you can see here this particular hour, 14 pips, last hour only 5. And by looking at those 2 stats, it also gives you a clue of direction. Sometimes we'll look at lower lows or higher lows and lower highs, higher highs. But, just looking at the open minus low and high minus open, that's where you can really see where there's pips to be had.
Yeah, it's sort of what you're doing is you're taking the blindfold off a little bit. Now, it's not completely off because it never is, but what it's doing is it's exposing some light as to the possible direction. And I underline, bold, italicize, whatever way you want to emphasize that word, possible, direction that the market's going to go in. And I like to use those numbers as well. And I look at it from two perspectives. I look at it before going into the trade, because if I'm sitting there, let's say the hourly, I'm just going to use just the high to low, just use that number alone. Let's say the high to low, range so far for that particular candle for the hour is sitting there at 35 or 36 pips. Okay. And if we're sitting at either extreme, it's sort of like, I don't know if it's really going to go very much further, because on the pound, generally speaking, we don't have very many hours that are above that, that 35. Now, you can look at a day like yesterday where there was a ton of them, but yesterday was an unusual day. But today, if you look, you got 21, 21, 23, 27, 37. So does it happen? Yes, it does happen. But of the last 5 hours, we've only had one that did it. So to me, it's sort of like, if I'm at the edge, I don't know if I necessarily want to take the trade, expanding that out, especially when I'm 30 minutes into the hour already. It just, to me, just doesn't make too much sense to go and do it. But on the other hand, if I'm sitting there, let's say I'm 15 minutes into the hour, and let's say the hour has gone down and I'm down 20 something pips, let's say 20, 21 pips, and we've had a couple of previous hours where we've run 25 or 30 or even 35 pips. I say, well, if that gives me a little bit more confidence, that's not a reason to take a short or take a long, but it is a reason to confirm that, hey, there's room to grow in that direction. And it's one of those things where, okay, if my method says go short here, okay, and I've got room there for potential pips there to still go, well, guess what? That, to me, it's just sort of like I said, it doesn't tell me not to take the trade, but it says, okay, I do have some room there. I'm willing to take that chance. And that's sort of like what I was saying about earlier, where you just learn little tricks like that over time, and you're able to feel things out, so that what happens is your profitability or your trade efficiency goes from, let's say, that 51%, which is where I was harboring, to like now where I'm about 80%, 85%. I've even had days that it was 100%. That's an unusual day, but it can happen. That's how you can go and allow that to happen. And at the same time, you're in a trade, and let's say you're up 4, 5, 6 pips, and now you're sitting in an hour that's at the edge of the range. In other words, let's say it's been an hour, it's been going up, and we're at the top of that range right now, or at the top of that candle right now for the hourly candle. It is slowed down. It's not really moving anymore. We're up 35 pips. You know what? It's probably a good time to go and take your pips off the table and put them in the bank, because there's a good high probability, especially if there's 10 or 15 minutes left in the hour, that it's going to go and want to retract a little bit. May not, you may kick yourself, but I've found more times than not, that's a little trick to go and just, put some money in the bank and take a little break until the next hour.
Yeah. Then, one thing I'm noticing here, you had mentioned, halfway through the hour, and that was one of the things where I started looking at that M30 candle, because I've got my cursor, 4 candles ago, which was the first M1 candle of the M30 candle. And you can see price went up about 3 or 4 pips from that, and then it came all the way back down almost to that open, and now it's just retraced. And that's one of the things where you take your pips off the table, because if you've got 3 and now or 4, and then it's come all the way back down to 1, well, you don't know if it's going to reverse and keep going, or if it's going to now take your positive or winning trade and turn it to a loser, because this really gets into the how you trade it. And as usual, the fastest 15 minutes in trading is up. So boys and girls and non-binary traders out there, just remember that you have to take the profit, because the market's not going to give it to you, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.